Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, June 9th, Friday, finishing the week with a mixed sentiment because despite the fact that we didn't have any economic data today, look at this fear and greed index. I know that for sure you are aware of this index, and we are right here with a 78 reading with extreme greed. And if you have enough experience in these markets, you already know that when everyone is bullish, when everything is so green, media, analysts, all are increasing the target prices. And when everything is this bullish, this FOMO, this hyped, there's a point in the market and in the sentiment in which big players take advantage of this FOMO, and when greed is extreme, you have really opposite movements, like the one we had today. Don't get me wrong, we had nice moves today and this week, but we are approaching and we are overdue with a nice, really big pullback. And despite Tesla, Nvidia, and everyone is saying that everything is good, but we have to really understand the context. And today I will try to provide you with some facts and some point of view for you to really get inside and meditate this weekend and really understand my point of view. Some of them maybe are opposite of what you are trying to do on the markets, but for sure it's good to have this kind of view. I'm very long term, and I'm willing to always trade moves to the upside. But personally, I don't want to lose to FOMO when everyone is so bullish that everyone is saying that Nasdaq 15,000, Tesla 500, Nvidia 500, crazy things like this. There's better opportunity and better risk ratios to the downside, because when everyone is saying this, you are already late to the party. And sometimes you get holding the bag, a huge bag. And today is one of those days. Let me first start with the 1 hour chart. We are in this big range between 14,260 last week low and last week high. In this tight range, we try to go higher for 14,700 like 3 times. One time on Monday, another time on Wednesday with this lower big flash from top to bottom of the range. Then yesterday we got a really grinding day, and today we were trying to really squeeze higher. But if you just read the chart, you can see that there's a lot of sellers up here. You can really understand that these are really extended levels, overvalued levels for tech. And Tesla is not helping today with a huge gap on news, but it's not helping to really control the FOMO of the nonsense bulls that think that markets should always be going up despite the context. That's my criticism today, because we were all unicorns, rainbows, flowers. Today we went through 14,627. That was last week high. We did a pullback. I'm sure everyone bought this pullback, but then we started to reject. We did a 100 retracement before 11 a.m. and into the lunch hour, we are just bouncing from settlement. I'm sure you will be saying that Friday afternoon power hour, this is going to be huge. But this kind of move, it's already showing you that Nasdaq don't want to go any higher because everyone is buying, but there are certain players, big players, swing players, that they are not willing to just buy at these levels. And you have to really put try to understand that point of view, because without any kind of pullback lower, we are not able to gather those beats. And we need those beats because those are big players. Up here, the only ones that are buying are retail, FOMO, Tesla addicts, zero DTE gamblers, and things like that. And if you don't understand that, you don't have enough experience in the market. Hedge funds, big banks, not only are not playing these moves, there's a lot of money on the sidelines, they are adding shorts up here. And the only one that is actually putting liquidity is the Federal Reserve. There are certain analysts, YouTube is plenty of those, that have indicators for the Federal Reserve liquidity inflows, and there's a ton of that into the tech stocks. Because the rest of the market is actually not following through. This is RSP. This is, a lot of times I'm trying to really put things into perspective. This is an equal weighted ETF for the S&P 500. And as you can see, it's very different from the Nasdaq and from the ES. So what's actually happening is that breadth is improving. We are right now at 51. I'm glad that the rest of the market, the rest of the thousands of stocks that are included in the market are actually improving. This tracks the 200-day average percent stocks about that indicator, and it's actually improving, but we are at 50. We were at 41 at overextended levels, and there's clearly a rotation from the tech stocks to these undervalued and better valued stocks in the Russell, in other markets. Tech stocks, Nasdaq stocks are hypervalued. This is not the first time that I'm going to tell you this. This is actually a bubble. There's no way this is driven by fair value. And if you don't understand that, maybe you have not the proper way of understanding the markets. We need big players. We need swing players. We need investors to really feel comfortable buying stocks and buying the indices. And these moves that we've been getting, let me switch to the NQ continuous chart. These moves don't offer the possibility to those players to really catch any bid. This huge gap that we got today, I mean, this is huge. We actually fill the gap on NQ. You can see we got on triple Q, let me change. On QQQ, we have this gap that we are not able to really fill. On the NQ futures, we did, but on the QQQ, we did not. So be careful, because there's a confluence of a lot of levels, a confluence of fair value stocks that are overextended, and there's already a move into other stocks that offer better risk-reward ratios for the Russell 3000 and things like that. We can also see that in the tech stocks themselves, because Tesla, look at this. This is huge. Tesla is supported by huge news for Ford, for General Motors, things like that. But that doesn't mean it can just skyrocket and don't provide any opportunity for a pullback to catch more bids and more buyers, investors, and more traders. There is no way they will just not short the market until it catches better values. Tesla is overvalued, Apple is just at all-time highs. Look at this trend. This just didn't offer any opportunity for really big investors. It really provided the opportunity to just unload a lot of shares up here, but not to really buy. A good buy would be back down here. Microsoft is also approaching all-time highs with any kind of opportunity for investors to really get in. I would like to see things like this. This would still be bullish, and will provide opportunities for other players with very big pockets to just enter this market, enter these stocks. Amazon is just skyrocketing. It's almost directly going to fill the gap. I would like Amazon to fill this gap down for better kind of trades. These are healthy pullbacks that allow other players to really come into the stocks. And don't get me wrong, I want bullish market. I like to buy things, but there's no way I'm going to buy in the long term these kind of tech stocks at these prices. Google, look at this, it's just skyrocketing. Nvidia, you know the deal, right? You know the deal. There's no way people is buying up here. And if you are buying up here, let me tell you, you are not doing a good job. Because it down here, if you lost this opportunity for this gap, that doesn't mean that this value is better just to continue higher until the moon. Markets don't work that way. Look at this. Usually markets offer several opportunities to really come into the stock. And these kind of moves, irrational moves, hyped moves, either AI, either news with Ford or GM. Come on, we are not in a spot in which we want tech stocks to just skyrocket without any opportunity to get in, because that only provides a bad sentiment for buyers to really chase the moves and for big investors and players to be just out of the market, to really be on the sidelines. And you don't want that. If you really want to be a bull in this market, you really want everyone to be in the market. Not only the gamblers, the option 0DTE gamblers, not only the day traders. You want the big players to really be in. And they are not in the market. They are on the sidelines. And more than that, they are shorting, adding shorts to big positions. Because at this point, I'm just not talking about the economy. I'm talking about the technicals on the stocks. When you have a good opportunity to buy stock at a good price, and Nasdaq is not offering that. But if you put on top of that dollar is doing a good job offering these opportunities in line with the economy, mid and long term, you have yields still going higher, and you have this Fed that is willing to continue raising rates. You have all this debt that people are accumulating, households are accumulating due to not being able to just pay on cash. They are increasing their debt. Mortgages are going down. I mean, you know the deal on the economy. I'm just telling to you, I'm not discussing the economy. I'm just telling you that these charts, these stocks are not at a fair value. And at some point, I'm not buying. And let me tell you, I'm not the only one thinking this way. I want the market to pull back to offer better values for everyone. I don't want to trade these kind of things in which you think is going to skyrocket and you just buy every dip and you think everything will be up forever. I want more rational markets that offer better price action for everyone to really take part into the action and to just offer better values for everyone. I would like to day trade trends, but I would also like to add long term, and Nasdaq and overall markets are not letting me do that. That's really frustrating. That's why a lot of people is super frustrated with the fact that they think, am I crazy if I buy Tesla at the resistance? Yeah, why not? And then it gaps up. This is not the way, this is not the way you buy. Everyone sees this as resistance. A natural, more healthy price action should be something like this. But we are not getting that in Tesla, we are not getting that in Nvidia, nor Amazon, nor any stock. They are just going up, 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 up. And that is not sustainable. I'm happy that this kind of weird price action, let me tell you, this looks super bearish for next week. And next week is CPI and third week's option expiration. So be really careful next week if you think Nasdaq is going to continue higher. Well, if it goes, it goes. I will not, I think I'm not gonna take part of this move. If it happens, I would like markets to really pull back, to really show that they are providing better lows with fair values without crashing the economy. Because at some point, this up, it will just switch to a huge rug pull or something like that. We already saw that. We saw these kind of things up, huge up and then down. We saw these kind of things in Apple also, up, and then retracement, up, and then retracement. I mean, we need to have a better market. This is not a good market to really just go up indefinitely, infinitely until something breaks, and people is just learning to buy the dip and buy at any level and just wait because stocks always go up. This is not the way. And I really don't like this market. And I would like to take this opportunity today to really show you why I think the way I think. And maybe some of you will agree with that. And some other will just say you are just a noob and will just unsubscribe and things like that. I don't think this market is doing a good job on offering good opportunities for all players in the market to really step in. I'm not only thinking that, I have evidences that there's a lot of big players and investors in the sidelines. They are not taking part in this market, in this price action. And more than that, they are doing the opposite. They are adding shorts, not for hedges, just for the huge correction that at some point is going to happen, not only based in this technical chart, but also based on the economy and on the context of this year and next year interest rates and all the stuff that you are for sure aware. And that's the message for this video today. That's the message. I reviewed the dollar, I reviewed the single stocks. Well, if there's something you have to really be aware is that gold, that also hates high interest rate, is actually consolidating here. I still think gold is going to continue lower, the same as copper is just putting a topping tail here and is trending lower. Metals, also silver is doing some kind of bounce, but I think it's switch trend. Crude oil is also feeling the pressure of demand destruction, but Nasdaq is just up here. So why is Nasdaq doing this? Well, I think people just lost their minds and they feel complacent and they don't think they are in a situation that is clearly really not optimal for investing in this market. And that's all. Quick view on the sector funds. Energy is in the red, utilities, staples, and healthcare defensives are in the red. Consumer discretionary is actually breaking out. Consumer discretionary is really following Tesla, Amazon, Google, Meta, and things like that. And it's actually breaking out. This chart looks bullish, but why is bullish? Why is consumer discretionary, consumer spending sector fund showing this breakout when we are not really seeing signs of lower inflation, and more than that, we are seeing signs of higher spending, higher wage growth, higher labor market jobs on jolts. I mean, this is the nonsense. It makes no sense for this to go up. Well, the sector fund is really affected on the individual performance of Tesla and other huge tech stocks. It's not showing what really consumer discretionary is feeling in the background. So be really careful. Be really careful, because I'm for sure certain, I know that there are big players not participating in this price action. There are big players going against this price action because they already feel that the trend is starting to weaken, and next week is a very important week. Next week is CPI. Next week, sorry, let me share that. Let's do a quick review on the economic calendar. So next week is CPI on Tuesday, and then we have on Wednesday PPI, and on the afternoon on Wednesday we have FOMC. So FOMC, it's the next week is a really huge week. And on top of that, we have third week's option expiration. Millions of options will expire next week on Friday. So next week is really, it's a alignment of all this overextension on the tech stocks, on the overall market, and also along with the fact that we have big economic data. I think something big, really huge is really cooking here. And I don't want to just be the last one buying and feeling the back holding. I don't want to be the first one just buying the top. And I will just wait for an opportunity that I feel is rational, I feel is with good value for my long-term investments, and also healthy for the overall trend of the markets. And I will continue waiting for that. I will not lose to FOMO. I will not lose to AI hype. I will just continue with doing what I'm doing best all these years, that is having patience, discipline, and good risk management. Right now, these markets are not offering that. I want to make money, but I don't want to go against my process, the process that got me here, being profitable, day trading, and also investing. So I hope I'm not the only one that feels this way. And next week is going to be awesome to really see who is on this boat and who is really making smart decisions. So thank you for your time. As always, if you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Let's do a quick last video on the market. 1 minute chart on the NQ. Well, it's trying to push again, but this is not the way you should be pushing. We are continuing rejecting today higher pricing. Everyone was so hyped with Tesla 5%. I don't know. Everything just insanely gapped up, and after the open, actually they were quite weak. So if you do that analysis, you will understand that maybe tech stock is not as strong as it was anymore. So thank you for your time, and remember that discipline and risk management are key for success. I hope you had a good day, a good week. Have a nice weekend, and see you on Monday. Stay safe, everyone.